So welcome again, everyone, to this week's webinar. Again, we're very, very fortunate to have the unique and inimitable Christine with us again. I won't try and do her justice by introducing herself, but for those who haven't witnessed any of our webinars, they're really, really good and really, really beneficial for anyone running their own business. And I'll let Christine give you a bit of background as to why they are so good. Over to you, Christine.
Thank you. I'm just going to go straight into, can you allow me to share my screen? And I'll get straight into the, yay, fantastic. Great. Hopefully you can now see my slides. Fantastic. So thank you, Mark, and to everybody who is here live, and anybody who didn't make it live but is listening to the recording, equally welcome. I'm going to run through the basics of really knowing your numbers, and I'll take questions at the end, and equally there'll be contact details at the end if you're not watching this live and you want to ask some questions, then you will be able to pose them to me. Now, if you are here because you want to have a better relationship with your numbers and you typically find knowing your numbers quite challenging, you're absolutely in the right place. So for me, I'm an accountant. And accounting is probably one of the most boring subjects in the world. It's also one of the most confusing. But if you want to be rich long term, if you want your business to flourish and to really add value, not just to yourself, but to your employees, your community and society as a whole, then frankly, knowing your numbers is one of the most important things that you can do. But I will warn you right now that this is not going to be an accounting lecture. It is literally going to be about all of the things that you really need to know to be able to get under the skin of your numbers. So what we're going to talk about today is how to get a really understanding of the basics of finance. It's something that your accountant probably doesn't communicate with you effectively enough. You might find that one of the things you think is, I can understand the individual words that are coming out of my accountant's mouth. I just don't understand what he's talking about. It'll also give you an idea of how you can better commercially understand your business and have that understood by your team. Primarily, what I'm going to really focus on is the difference between profit and cash, exactly what those things are and why they're different, and how understanding the difference can actually help you making decisions, particularly on spending and funding. And the big thing is that I'm hoping that none of you are going to be yawning here, because it's not a talk about accounting. It is about the mechanics of the numbers in your business. And right at the very end, I'll introduce you to a book that will help you do all of this. Once you've gone through this particular talk. So why am I qualified to talk about this? Well, I've actually written 4 books. I keynote speak about knowing your numbers. I'm also business mentor of the year 2020 and 2021. I also happen to be an accountant. It was a war of attrition. It wasn't something that came naturally to me. It was something I really had to work at. And therefore, I'm really passionate about making sure that business owners also come at this without having to do the 4 years of study that I did. So how do you know that your business is actually generating value, and what value your business is generating? Well, fundamentally, that all really comes down to knowing your numbers. If you don't know your numbers, you can't possibly understand what it's doing, how your business is doing, and how you're adding value to your business. So one of the things that is really important is that from an accounting perspective, and this is the only part of this talk which is going to be about accounting, from an accounting perspective, then all of your accounts, all of your numbers really come from your accounting system, and whether that's manual, whether it's cloud-based, or whether it's just on a desktop, it all really comes down to something called your trial balance. And your accountant will often talk about taking your accounts to TB level or trial balance level. And the trial balance is the master document in your business that actually lets you it helps you build what we call your key financial statements. And your key financial statements are the things that your accountant will put together for you for really two purposes. I mean, one main purpose, but really two purposes. And one of the purposes of your key financial statements is for you to communicate on a fair and true basis to your shareholders. But actually, that's kind of secondary to the main reason why your financial statements are put together in the way that they are, is purely for you to be able to complete a tax return and pay tax to the government. That's it. You know, the secondary communication with your shareholders is almost a byproduct. But the reason why you engage an accountant is so that you can pay tax. But the problem is that your key financial statements, which are really there for the purpose of paying tax, do not help you particularly well in running your business from a day-to-day basis. For a start off, they lag behind. So by the time you get your financial statements, they're already out of date. But it is really important that you understand what your financial statements do for you and how you can adapt them into something called management accounts, which by their very nature help you manage your business going forward. So there are three key financial statements, and the first one is your profit and loss. Now, most business owners will actually understand the whole basis of profit and loss. It's stuff I get sold, money that I bring in because of stuff I've sold, money that goes out because I've spent it generally generating the revenue or delivering the service. And then what's left over right at the very end is either profit or loss. And that's usually what's left for me as a business owner. A profit and loss is a measurement of activity between two moments in time. And it's really important to remember that a profit and loss is between two moments in time, because then you know that you can measure it by week, by month, by quarter, by year. You don't have to stick to your financial year. You can measure it over very specific periods of time. And what your profit and loss tells you is literally the accounting profit or the accounting loss. And I know a lot of business owners run their business by looking at what their bank balance is, and that is not the same as your profit and loss. And one of the key elements that comes out of your profit and loss is your profit margin. And a lot of people can pay attention to their profit and loss, but what we should be paying attention to is exactly what our margins are. If you don't have adequate profit margins, particularly in the difference between what you're selling and the cost of selling that product, and if that difference, that margin, doesn't cover your overheads, then you could be very slowly going into bankruptcy. And this is just one of the key commercial pieces of information that it's really essential for your staff to understand in the business, because then it allows them to make decisions about the activity that they're undertaking. If you've got a couple of different products and one of them's got a tiny little margin that makes a very small contribution to your overhead, and then you've got another product that makes a much bigger margin and it takes equal effort to sell them, you really want your energy to be focused on selling the item that's got the biggest margin. And profit margins are the challenge that cause most businesses to slowly go bankrupt. If you haven't got enough margin in your business to cover your overhead, it might be something that you need to look at and address really, really quickly. Now, I'm going to talk a bit about overheads, because your overheads are anything that is a cost in the business that is not the cost of delivery, but simply it's a cost that would still go ahead even if you didn't sell anything. So your direct costs, or your costs of sales, are those costs attributed to direct delivery of the products or services that are giving you revenue. And the margin, the difference between the revenue, the income that you're generating, and the cost of delivering that, is what contributes to your overheads. So actually controlling your overheads and understanding exactly what value your overheads are adding, and where some things aren't adding any value at all, recognizing that, just stop doing it, is a great way of looking at how you can manage your the costs in your business and also generate better bottom line profits. So one of the things that I feel is really important to business owners is understanding what your break even is. Now, your break even is where you sell X amount of product or services that cost you Y amount of money. And then the difference between the volume of those that you've sold actually immediately and directly covers your overheads so that you make zero profit. So this is, how do you get to zero? Not a loss and not making more money, but how do you get to zero? How many sales does that take? How often do your customers have to buy, and what value do they have to buy for you in any single period to break even? And how do you generate the cash in that? So cash has little to do with break even, but the frequency and recency and value of your sales and the payment terms on which they are made will make a significant difference to whether your business thrives or struggles. So if you don't know your break-even point, then it's worth going and having a look at it, and making sure that you do understand it. And not only that you understand it as a business owner in your business, but all of your staff do too. So that's profit and loss and the key elements of profit and loss. The second key financial statement is your balance sheet. Now, your balance sheet is a snapshot at a single moment in time. So whereas your profit and loss is the measurement between two periods of time that you have a start and an end date, the balance sheet is usually the position at the end date that you're measuring your profit and loss. And it's really showing you all your assets and all your liabilities, all the money that you're due to receive, or money that is owed to you, and all the money that you owe to other people, plus all the fixed assets that you've got working in your business. So it allows you to identify the key value in your business at any particular time. And the balance sheet also helps you and your accountant understand what distributable profits, i.e. dividends, that can be drawn out of your business legally by the shareholders of the business. And equally, it also shows you how much is invested in the business in terms of working capital. So how much of how much is owed to you and how much you owe your suppliers, and your cash. That's the amount of capital that's tied up just in the general operating of your business. And that working capital number, it's a really, really good number to have a good understanding of. So one of the challenges that I often speak to business owners about is the difference between cash and profit. Now, profit is the difference between the stuff that you sell and the cost of delivering it and your overhead. But you can often you sell products and your customers don't pay you for a period of time, and you buy services and products into your business that, again, you don't also have to pay for a period of time. And the absolute nirvana really of a good business is a profitable business that is also selling products where it's paid for immediately, where you don't have to pay for the cost of the goods until after you've received your own money. That's a really good cash flow cycle to get into. But, and here's a big warning, you can make profit without generating cash. And equally, you can generate a positive cash flow without generating profit. And knowing which way your business works is really key to you having a thriving business that's never going to run out of money. Because one of the sure things that kills businesses is lack of cash flow. And it's the flow of cash through your business that's the absolute lifeblood of your business. So you need to be clear that you are both making profit and generating positive cash flows for you to have a thriving, profitable business that isn't going to run out of cash. And if you don't have positive cash flows as a result of your business, then you need to, well in advance of needing it, you need to have access to additional funding or flows of cash, even if it's just a working capital facility, so that you don't end up hitting a brick wall with no cash. And then that, being like an engine without oil, creates a seizing of activity in your business. And the third statement, and it's often one that's missed in really small businesses, is your cash flow statement. And there's a couple of really interesting quotes. I mean, Barack Obama actually said, money's not the only answer, but it makes a difference, and it can make a difference, especially when you're out of it. But equally, many small businesses would rather face an angry barbarian horde than to tackle their cash flow statement. And the lady who said that has obviously said it with such spirit that she's experience of this directly. Your profit and loss statement and your balance sheet statement work in relation to each other to show how the cash has moved. So the difference between the movement between your profit and loss statement and your balance sheet, which is a snapshot in time, and the difference between the two of those, or the way that those interrelate, is how you define your cash flow statement. And they're not always included in your statutory accounts because many small businesses are not legally obliged to provide cash flow statements, but it's a really good discipline to understand. As your business grows, getting clarity on your numbers on a regular basis, understanding your financial statements, all three of them, is really key to you being able to make the right decisions going forward. But remember that cash flow statement, like all of the statutory financial statements, it's just history. It's completely looking backwards at your business. And if you don't have a really good relationship with your accountant and you submit your financial data, and then 9 months later after the year end, your accountant finally spits out your financial statements just in time for you to squeak in before the statutory deadline for submitting your accounts, then you're not proactively managing and looking at your business and your business numbers in a way that's going to allow you to make accurate and timely decisions. Numbers are really only there. They're like a language that allows you to make decisions. So the number of people that I hear saying, oh, I don't know my numbers, I'm number blind, I've never been any good at maths. Accounting and your business numbers are nothing to do with maths. And they're just a language. You wouldn't say, oh, I've never been good at reading, therefore I'm never going to read anything again, or I'm never going to learn new vocabulary in your business. You would just never even dream of saying, I'm not going to read. So saying that you're number blind or that you don't understand numbers, and then not taking the time to actually go and find out about it is a bit of a derogation of your business duties. So what are the really important numbers, not just historically, but going forward? What are the really important numbers that are good for you to know. And ultimately, knowing your numbers means that you can ask the question, what's making you profit? And then more importantly, what's not? There may be items that or services or products that you're selling that you could be selling at a loss. But if you don't know, then you can't be making effective decisions. So some of the really big and easier numbers that you should be knowing in your business is what you're turning over, what your sales are, not just the number of products, but the value of all of those products. You should have a good grip of what your gross margin is. And for the avoidance of doubt, your gross margin is the difference between what you've sold in terms of the invoice that you've sent out, excluding VAT, because that's just the tax, that's just you collecting tax on behalf of the government. So what your sales are, less the cost of those sales, and that's your gross margin. And it's that gross margin as a percentage, but also as a value, that is a good indicator of how healthy your business is when you start looking at how many sales you need to cover your overheads and therefore break even. You really need to know your break-even point. And then finally, after your overheads value has come out, understanding what your operating profit is. So your operating profit is sales, less cost of sales, less overheads, and that is effectively, in really simple terms, your operating profit. Now, I know many of you will have heard of phrases like EBIT and EBITDA. And EBIT and EBITDA are simply earnings before interest and tax. And then the DAR bit on the end is earnings before interest and tax and depreciation and amortization, which is the utilization of the economic value of your fixed assets. So, but other really useful numbers, I think, in terms of the health of your business and certainly spotting trends, whether you've got a trend that's going up or whether you've got a trend that's declining, are things like your your revenue per employee. This is a really good way of benchmarking yourself against other businesses in your industry sector, for example. Equally, it's really important for you to understand the cost of acquiring a customer, because if you do not understand how much it costs you to get a customer and what the lifetime value of that customer is, then you could have a value of your customer being £100. So that's how much profit that customer is going to generate for you. But if it costs you £500 to get each customer, then your business isn't going to last very long. So understanding your cost per customer acquisition is very important. And another important number for me is what your marketing return on investment is. Now that links very nicely in with the cost of acquiring a customer, but understanding where your marketing effort goes to, how much it's costing you and what benefit and value it gives to your business is probably a really good number for most businesses to know. Now, if I could just give everybody one single piece of advice, and that would be really get a grip with cash flow forecasts. Businesses running out of money is the biggest killer of businesses. And yet so many people do not do cash flow forecasts. They literally run their businesses on what their current bank account says the balance is, which can give you a very skewed view of what's going on. And I know this to my personal cost going in to run a business that had on the surface of it seemed to be doing really well, but when we started to look at the cash flow and forecasting the cash flow, we quickly realized it was going to run out of cash really quickly, and nobody had done this work before. And equally, because the numbers weren't clear to the senior management team, they had been making decisions that which was just confounding future cash flow problems. So Happiness is absolutely a positive cash flow. And if your business doesn't have a positive cash flow, or if you don't know, then you need to start making some decisions and finding out what your cash flow forecast position is, and doing something about it. So the key piece of advice I would give is it doesn't need to be complicated. If you can't do this, or get someone in your organization to do it, and keep it really simple, and so that you understand what it's telling you, then you might as well not do it. So with cash flow forecast, people will generally try and make it much more complicated than it should be. And it's really about you having a handle on your cash flow expectations. So understanding when your money is coming in and when it's going out, and the timing difference between the two, and whether you've got any funding gaps from a timing perspective between the two. Because, like I will reiterate, you can have a profitable business, but if your cash flow is it lags behind the profit significantly, you might find yourself running out of money. So you can have a profitable business without positive cash flow, but equally you can have a positive cash flow business without generating profits. And the great thing about cash flow forecasting is it means that you get clear line of sight on your future expenses and investment. If you need to buy an expensive piece of equipment, or if you need to hire new staff, you already know what funds you need to retain within your business to be able to keep it going, so that you don't suddenly run out of money because you've withdrawn dividends or just high amounts of cash. It'll help you understand the timing of future expenses, particularly where they're discretionary spend. And if you want to invest in, say, a sizable investment in a piece of equipment, for example, you can actually make the decision as to whether you're going to buy it outright, whether you're going to lease it, or whether you're going to borrow money. Equally, a lot of people come unstuck and get really tight cash flow when they get caught out by payments that are only made annually. And then also, if you're growing your business, a lot of times business will really suck up a lot of cash in their working capital, because as you're selling more, you're buying more. And if the timing difference between when you get the money in from your sales is significantly further out than you having to pay for all the stuff that you've got to buy to be able to deliver the service or hire new staff, then you're going to have greater demands on your working capital. The second thing that I would always recommend for business owners to do is to actually have some management information. It's often called management accounts, or you might even use a management information system. But management accounts are forward-looking measurements of your performance. And they really, for me, there's really three key areas. One is your key performance indicators. So what are the key things, the key numbers in your business that give you clear indicators that you are performing or exceeding performance, or falling short of your planned performance? And the key indicators are going to be different for every single business. And some of them might not be financial. You know, it could be how many man hours that I've got in terms of delivery. What's the utilization of the people that I've got on payroll? Particularly if you're running a services business or professional services business. Your cash flow forecast is absolutely a key part of your management information. It allows you to know when you can make decisions on spending, and also to get well ahead of time to get funding. It's really challenging to get funding when you absolutely need it and are desperate for it. It's just a crazy thing that banks will lend you money when you don't need it. So actually getting ahead of that curve so that you're not time stressed and going to damage your business by lack of cash flow. It means that understanding your cash flow forecast is pretty essential. And of course, the next thing is really understanding what your sales pipeline is. So what have you got coming in? What do you need to do to create more sales? If you've got a lot of sales coming in, have you got enough resource to deliver them? And do you need to start hiring? So all of these things, not necessarily always financial, but they do revolve around financial information, and they still boil down to the really important numbers, non-accounting numbers in many cases, that that you need to understand in your business. And the great thing is that when you've got adequate management information and management accounts, it means that if a crisis happens, or if something unexpected comes out and happens, management accounts help you answer this key question. When there's a crisis, can you survive this? Now, many, and the most recent pandemic issues are really bringing this to light. Your ability to get timely information and data that will allow you to answer this key question about your business will make it a lot less stressful for you. And also it will allow you to understand exactly what happens when you need to prepare for a rainy day. I'm still surprised at how many people who run businesses just are so close to a crisis point because they just don't know their numbers, and they haven't got any resilience or made any preparation for if there is some kind of crisis or a rainy day. And that can be, losing your biggest customer, for example. If your biggest customer became insolvent, which I know has happened a couple of times with some really big businesses the last couple of years. What happens if you can't work in your business, or some of your key staff are unavailable? The resilience of your business is really going to rely on you being able to understand your numbers. So if some of that has left you a bit more confused, or even with the recognition of, oh my God, I really need some help with my numbers, then there's plenty of help that you can get out there. So most business owners that I know belong to some form of community, either industry bodies, the FSB, the Institute of Directors. There's generally a community that you will belong to. If you don't start belonging to one, with really small businesses, I can't recommend the FSB enough. They generate a lot of support and advice for small businesses, but the most important thing is their community. Some of this may even raise questions that you might need to be asking your accountant. So go and ask them. And if you've got an accountant who you don't understand, and he can't or she cannot make themselves understood by you, you're probably with the wrong accountant. So it might be time to change. And then the other thing is actually getting a coach or a mentor that understands numbers, that's going to challenge you and keep you accountable to your numbers. Actually getting management accounts in place can be a bit of a challenge, but getting somebody along your side who's supportive, but equally is going to hold you to account for having your numbers, is generally a really good, it's a good investment, both of your time and money. So I promised you a whistle-stop tour. So we've covered some of the basics of finance that you really need to understand from the very start. Some of these numbers are things that you should be sharing with your team, particularly management accounts, your KPIs. You don't necessarily need to, if you don't feel comfortable sharing all your financial numbers, but some of the other numbers in your business definitely should be shared by your team to enable them to make the decisions in your business and actually give you better commercial outcomes. If I can recommend anything from this, it's go and make sure you really understand the difference between your profit and your cash flow, because this will help you make better decisions on future spending and the necessity for funding. And I'm hoping that during all of this, there was no yawning. Now, I have actually, I'm going to take some questions, but if you want to know what to do next, my book 5-Minute Finance is available on Amazon. And I don't usually plug my book, but accountants do buy this book to give to their clients so that they can engage with better conversations. So if you really don't know your numbers, go to Amazon, find the book. It's available in Kindle. There's a print version if you contact me directly. And if you want to have a quick diagnosis of where your business is right now, there's a 7-question survey at yourprofitscore.com. Don't worry, you won't be targeted with extensive, relentless marketing. You will get one email, which will be your actual score. And it might help you focus some of your efforts in actually having a better understanding of your numbers and being able to run your business better by making better decisions. I'm going to take any questions that are available now. If you're listening to the recording of this, do not hesitate to contact me with questions, and I will definitely respond to as many people as I can. If some common questions come up, I'll find a way of making sure I answer them and enable everybody to get the answers to all of them. Find some way of doing that through Mark or a blog on my website. So
how do you want to handle that, Christine? Do you want people just to unmute themselves and ask a question if they want to?
Yeah, that'd be absolutely great. You can either ask me directly or you can stick it in the chat.
Yes, it's Mark here.
Hi.
Hi. The question is regarding your cash and your profit. I guess the difference is when you have like payment terms. Is that true? When you have outstanding payments and they haven't come in yet?
Yeah, absolutely. I mean, if I was to put it in one word, it's timing. So the difference between your profit and your cash flow is fundamentally timing. And a lot of people don't account for the difference in time between spending money and receiving money. And if you're struggling with cash flow, the one piece of advice I would give everybody is go and look at your payment terms. Because if your payment terms aren't aligned with your sales terms, so if your payment terms, i.e. your sales terms, aren't aligned with your supplier terms, then you might be storing up some trouble, particularly if you start growing your business beyond a low level of growth. So when people start looking at like 20 and 30% growth on year, the thing that really stymies them is always cash flow. And it's because people just don't think about it.
Okay, thank you. Thank you very much.
No problem at all. And just on that one, I actually have a document on my website, which is how to fix your cash flow. So if you've got cash flow challenges, or if you want to avoid them, and this is it, don't wait till you've got a challenge, avoid them, because that's far less stressful.
That's what I want to do.
If you go onto my website, one of my downloads is a mini guide, and it covers the 3 key kind of areas. One's clarity, one's cash flow, and one's growth. So the mini guide will give you some more details on that. If you're then interested in something in more depth, I do little books on each of those 3 subjects. I do mini books in more depth, and it's all free. It's all completely free. You just have to reach out and ask for it.
Okay, great. Thank you very much. Appreciate that.
No problem at all.
Christine, what about courses in this stuff? I mean, I did a finance for non-financial people. Would you recommend?
Oh, yeah.
Going to be in charge. I mean, I was fortunate to have a really good kind of financial admin person that did all the management accounts and kind of presented it in 3 simple levels for me. But what about people that don't have that?
It's it's one of the things I can't recommend it enough, because people go finance for non-finance managers. That's what I've got a finance manager for. And there is a tendency for some business owners to just delegate I've got a finance person for that. But if you don't know your own numbers, how do you know that your finance person is effective? I mean, honestly, in my personal experience, I've gone into businesses behind finance people who've not been very competent, but the business owner has delegated their entire responsibility to somebody who said they know what they're doing, but didn't, and then left that business in a mess. And I've done a couple of bankruptcy rescues as a result of that. And I've also gone into organizations where there's been wholesale fraud. Now, the fraud wouldn't have happened if the business owner had taken some responsibility for the numbers. So knowing your numbers, you don't have to do this stuff. You just need to understand it. And a lot of business owners just say, well, I don't need to do that because I've got someone to do that for me. But you do not have someone to do the understanding, your own personal understanding. As a business owner, you're invariably a director of your business. As a director of your business, you have direct legal responsibility and obligations to all of the stakeholders. And knowing your numbers is one of the duties that you cannot derogate. And so many people do.
I have another question. Is like your cash flow positive? Is that kind of is there a KPI around that?
That's very much a how long is a piece of string question, I'm afraid. There are so many different moving parts to that, but if you're, so let me start at the top. If what you're selling costs you a lot less than what you're selling, then I put a big tick in the box in terms of that's exactly where you should be. Very high, you know, the higher your gross margin, the difference between what you're selling and what you've bought or what it's cost you, having a really healthy gross margin is generally a good first stepping stone to positive cash flow. Okay. Then making sure that you understand how much of that you need to sell to cover all your overheads. Again, second big tick in the understanding how to create positive cash flow. But here's the single most important thing, that all of those three things, your sales, your cost of sales, and your overheads, will not generate positive cash flow unless you understand the timing of the flow of cash. So timing is always key, but you're not ever going to generate positive cash flow if you're selling something for 10 quid, it costs you 8 quid to make it, and your overheads are £2 million a month, and you're only selling 100 of those. So some of it is basic maths and some of it is timing. But to give yourself the absolute best chance of generating positive cash flow, really healthy gross margins, a clear understanding of what your overheads are and how much it takes to cover them, and an understanding of when your money comes in and when your money goes out. Get those things and you'll be fine.
Okay, great. Thank you. I appreciate that answer. That was a good answer. Thank you.
No problem. Thank you.
Question here from Matt on the chat. Can you recommend a finance course for non-finance people?
Oh, anything that's done by a reputable training company that has been accredited.
So sometimes this stuff as well can be part funded by your local growth hub or something like that, Matt. Yeah. So yes, there's often generic courses in place for that kind of stuff. So maybe Google your local growth hub or whatever. Actually, no, Matt's wife's very financially literate, so she might be able to tell him. Yeah. He might not want to listen.
I was going to say that having a member of your family training you is sometimes a bit like having your dad teach you how to drive.
Yeah,
not always the best.
It's a different dynamic, isn't it?
Yeah.
But yeah.
Thanks for that marital breakdown suggestion, Mark.
So one of the things I always recommend, though, is, I mean, there's hundreds of these courses available. What you want to do is make sure that your course is being delivered by somebody who knows what they're talking about, somebody who's been accredited in some way. But equally, and this is just my tuppence for nothing. If you go to one course and you just don't get it, don't let that put you off going to another course, because it could be that just the way that you learn and the way that you communicate is not aligned with the person who is delivering that particular course. So if you find that you go on a course and you just think, I'm still a bit lost, I must be thick. No. Nobody's too thick to understand their business numbers. If you can start a business up, you can understand finance and your numbers. You guarantee it, like absolutely guarantee it. There's no such thing as not understanding it. It's just the way you learn and the way you communicate needs to be aligned with the person who's delivering the course. So if you go on a course and you just don't get it the first time, don't be afraid to go on another course.
Can you recommend a good template, like a cash flow template? Is there one that, or like QuickBooks would have one or something like that?
Yeah, all of the accounting packages all have their own, but equally, like some people make it really, really complicated. And for me, you only need 3 or 4 lines in your cash flow forecast, and that's when's your money coming in, and do you need to measure it weekly or monthly? So your column's going to be weekly or monthly, and then it's literally when are you expecting the money to come in, and then when are you expecting the money to go out. Now, there'll be some money that goes out because of your supplier payments, and then there'll be other things that go out because of your utility bills or your salaries. So, and I usually put those as separate lines, but it is, honestly, it's a 4 or 5 line spreadsheet. Don't make it complicated. Actually, in my 5-minute finance book, there is a template in there. So if you go and have a look at it, then yeah, it's a really, really simple format. In fact, all the formats are in the book as well. So
okay, is there difference between your cash flow statement and your cash flow forecast?
Yeah, the cash flow statement is looking back. It's what happened, where did the money go, where did it come from. Cash flow forecast is looking forward. So your cash flow statement brings you up to today's bank account. Your cash flow forecast takes today's bank account balance and says, right, this is where the money's going to go and this is where it's going to come from. That's it. It's just literally, it's two different directions.
Okay, great. Thank you very much.
No problem at all.
Related to what Mark said in QuickBooks and all the other various stuff, there seems to be I guess this stuff is even more important because there seems to be a move towards almost cutting out a stage of what the accountants used to do. It's almost kind of you need to be able to do more yourself. Yeah. And then there's lots of plugins, isn't there, that you can plug into QuickBooks or they give you a forecast and a statement, even if they don't have the reports on them.
Well, the thing is that with HMRC's move towards making tax digital, which is basically quarterly tax returns, I do appreciate for any accountants that are listening who are sucking their teeth going, that's not what it is about at all. But in principle, it's kind of at the highest level. It's about getting tax in more frequently and on a more timely basis. It becomes more and more important, not only for you to know your numbers, but actually to make sure that the numbers in your accounting system are as accurate as possible and putting them in right first time, because otherwise you're going to constantly be amending things. Now, if you can get your transactions, the accounting transactions, into your system accurately and timely, then these plugins work really well. But and there's absolutely hundreds of them now. And to be honest, the way that I would go and choose them is look at my accounting system, look at what the apps that you can plug in, and then just look at the ones that have got the most positive reviews, and look at what those reviews are, so that you can find out something that's really useful for your industry. But if you put rubbish into your accounting system, then none of these plugins are going to work for you. So you have to have a professional approach to the way that you deal with transactions. If you've got somebody in your business that's doing your accounting transactions, and then at the year end, when you hand it all over to your accountant, there's pages and pages and pages of amendments, it's probably worth sending your person on some training, or actually admitting that they're not a finance person and recruiting a professional finance person. They're not expensive, and there's lots of them. It's really, really easy.
With that kind of stuff, I guess, like you said, it makes it even more important you're putting the numbers in correctly. So you need either to do that yourself or to get a good bookkeeper or something, put that in, because the whole point of this stuff is it's real-time data, isn't it?
Yes.
You know, when you've got the plugins, when you can read the reports, all that kind of stuff, you can see your cash position, you can see your debtors, you can see all this sort of stuff. You can kind of say, look, can I make that decision today, rather than, you know, previously you'd have to wait, you know, pick the time, yeah, or to, like you say, your quarterly return, and kind of go, have we not got enough cash to buy that piece of equipment or to take that member of staff on, or how long are we going to have to make them effective, and all those sorts of things. So
absolutely. And I will go back to something that I've said in one of my previous webinars, is if you're the business owner and you're doing your own accounts and you're posting the transactions, please stop. Please. Even if you're an accountant, like I'm an accountant, I don't do my own books. Just please stop. Because as a business owner, you should be doing £10,000 an hour work, and bookkeeping is 15 quid an hour work. So stop doing 15 quid an hour work and let someone else do it, because they'll do it 4 times faster, 10 times more accurately. It's not going to frustrate them, because they generally do it because they love it. And that releases you to go and do getting and keeping more customers, which will, I guarantee you that getting and keeping your customers is more value to your business than 15 quid an hour to go and do your books. Guarantee it. And if it isn't, you're in the wrong business.
anyone got any further questions while we're fortunate enough to have Christine on the line, or you're going to go let her have a lunch? No. Feel free. You've got time. If that'd be just a thanks from Matt. So hopefully that was helpful, everyone, and we'll thank Christine again. And you know, for those that are watching it back, then, you know, hopefully it was very useful. And like you said, you can get in touch with me, or Christine's contact details are on there for further information. And yeah, heavily recommend getting a book.
Thank you. And I'll send all the slides and the supporting documents over, so that it's freely available for everybody.
Yeah, thanks, Christine. Jenny, I'll send that out to everyone. Thanks again, everyone. Have a really nice Christmas.
Yes, you too. Bye-bye. Take care, everybody. Bye.
Thanks, guys. Bye.